gold. Long before the conquistadors began making ill-fated trips into the Amazon in search of El Dorado, gold worked an almost unholy power over the minds and imaginations of men. Well, in 2010, the pursuit of gold may be less epic in scale, but there's plenty of evidence that passion for the precious metal has not abated. A prime indicator, today, the price of gold hit an all-time high of over $1,270 an ounce. That's up $1,000 from just 10 years ago. Call it the Great Gold Rush of 2010. The price of gold hit record highs today, more than $1,270 per ounce, and there were plenty of predictions it will go even higher, maybe much higher, before it stops rising.
There is so much anticipation building over the direction of gold.
You can't eat it, it doesn't pay dividends or interest or rent to you, but gold is still the stuff that fires the fever dreams of investors all over the world, especially right now.
Let's talk what has been working, and that's gold.
Gold futures rising to a record high.
I can get cash for this gold medallion of me wearing a gold medallion.
Why is the price of gold so high right now?
Demand, global demand, and they want a better currency. I view gold as a currency just as dollars or euros or yen.
Paul Brodsky is a partner with QB Asset Management in New York. He says that given the deep uncertainty about where this economy is heading, and the concerns many have that what the government is doing is not working, buying gold makes sense. The scenario you're describing is apocalyptic.
I don't think so.
The end of paper currency.
Well, you know, that's only been around for 39 years. And that's what most people don't realize.
The past few years certainly have been a good time to get into gold. 10 years ago, gold was selling for about $270 an ounce. In 2007, just as the subprime mortgage crisis hit, an ounce of gold cost under $700, more than $500 below where it closed today. All that action for a lump of earth.
Gold has no special qualities to it. I mean, it has no intrinsic value at all, just like dollars or euros or yen have no intrinsic value to them. But for 5,000 or 6,000 years, mankind has come back to it, not because it's special, but because it's scarce.
And pretty.
Perhaps. I like shiny things.
Beauty, scarcity, solidity. Gold has always been a refuge for investors in anxious times, and so these are boom times for gold dealers. At Isaac Cahan's Bullion trading company in Manhattan, business is brisk. People come to buy and sell gold, sometimes a lot.
Those bars are at about $700,000. When I got started, I definitely never thought that gold was going to be above $1,200 an ounce. In my wildest dreams, I was hoping it was going to get above $700 an ounce. I never thought we were going to go up till this high.
Cahan has been in business 22 years. He's never seen a market like this one.
All of a sudden, people are looking into different investments. People are scared of the stock market. People are scared of the low interest rates that they're receiving. So therefore, a portion of that money is definitely going into the hard assets, which is gold, silver, and platinum.
People are scared. All over the world, you see this rush to buy gold. They sell it at Harrods department store in London. And incredibly, there's a gold-to-go machine dispensing bars in the lobby of a hotel in Abu Dhabi. That's a little crazy, and maybe it's a sign that gold, like dot-coms and real estate before it, has become a bubble, and it could burst.
I have no idea what is driving except a kind of a wild and I think somewhat misguided hysterical fear.
Ben Stein, the actor, writer, and economics commentator, is wary of the frenzy for gold right now.
I think people are counting on it to be a sure thing, are possibly in for quite a severe disappointment.
Stein's got some history on his side. Look at this chart, the history of gold for 140 years. Gold prices spiked during hard times, the Depression, the recession of the early 1980s, and then they fall back sharply as the economy recovers. Today's gold enthusiasts are betting, in a sense, that this time things won't turn around quickly, that we're headed toward an even bigger economic calamity. Christopher,
yes.
You like gold?
Yes.
Why?
Because gold has an intrinsic value that's lasted for thousands of years.
Christopher Rodriguez is ready for the worst. We strolled with him down 47th Street in Manhattan, the street lined with gold traders. So after work or sometime during the day, you might come over and buy what? You buy coins, you buy little bars, what do you buy?
Yeah, I would typically buy a gold coin, perhaps. Typically 1 ounce coins is what I deal with.
He's got pretty much all of his investment income in gold, which he buys in coins and stores himself, because he's gotten to the point where he does not trust banks. What do you say to people who might hear your story and say, that's a guy who's going out and buying gold and he's stashing it away out of the banking system and he's probably storing guns somewhere and he's kind of a paranoid about life? What do you say to that?
You know, if you want to put your trust in what people are doing in this administration, if you're confident when the Federal Reserve doubles the monetary base in September of 2008, if you think that's going to have a positive effect on the economy, you know, you're free to do whatever you want. I think for me personally and for my family, this is the smart choice.
I would say if there's real inflation, I would be concerned and I'd be buying gold too, but there is no sign on the horizon of hyperinflation. Our currency is not a weak currency. Our currency is a very strong currency. It has rallied tremendously.
As for the notion that this economic downturn is different,
maybe this time will be different, but those are the most dangerous words in speculation. When there is a mania to buy a commodity without a good reason, it often ends in tears.
Still, right now, gold keeps going up and up, driven by a sense that the world is out of whack and gold can somehow keep us safe until, as history shows, the price plummets again.
The way I look at it right now, it's an emotionally driven market right now, and it's going to continue until the funds and the people change their minds.
If you can guess that moment, you'll be, well, golden.